So hello everyone, welcome back. Now over the last 48 hours we've seen some significant developments across the crypto market. And while there haven't been many groundbreaking technological announcements, there have been several important shifts in the market structure that investors should be paying attention to. So the main themes right now is obviously the Bitcoin weakness, institutional outflows, changing expectations around interest rates, and continued growth in stablecoin adoption. Now, in this video today, we're going to break down exactly what's happened, what matters, and what traders should be watching as of going forward. Now, today we will cover Bitcoin's recent sell-off where we hit 59K. That is absolutely crazy. So stay till the end so you don't miss out anything, and I'll explain everything in this video. Now, we'll also cover ETF flows and institutional positioning, macro and Federal Reserve developments, stablecoin growth and market liquidity, and what this means for the next phase of the market. Now, the biggest story over the last 48 hours has obviously been Bitcoin's correction. Now, after spending months trading in this bullish, strong structure, as you can see, we spent many months creating higher highs, higher lows, and we topped out at a level of about 82.8K. Now, Bitcoin experienced a sharp decline that pushed prices below several important technical levels, especially this low that we have here, which was on the 6th of February. Now, we actually broke that level yesterday, which was kind of crazy. Now, the move triggered liquidations across leveraged futures markets and caused a noticeable shift in sentiment. Now, what's interesting is that this isn't simply a crypto-specific event. For most of the cycle, Bitcoin has been heavily supported by the institutional demand through spot ETFs, corporate treasury buying, and positive expectations around regulation. Now, we're seeing the market question whether demand remains strong enough to support current valuations. In any bull market, corrections are normal. So the question investors are asking right now is whether this is simply a healthy reset or the beginning of a larger period of consolidation. Now, at the moment, that's not enough evidence to definitely give a strong answer to that question. But what we can say is that the market has become considerably more cautious over these past few days. So whenever leverage gets flushed out of the system like we have seen, it tends to create short-term volatility, but can also help establish a healthier foundation for future moves. Now, of course, the next major story is the ETF activity. So one of the defining characteristics of this bull cycle has been the introduction of spot Bitcoin ETFs. Now, these products allowed traditional investors to gain Bitcoin exposure without directly holding crypto. Now, throughout much of the rally, ETF inflows acted as a powerful source of demand. However, over recent trading sessions, we've actually seen the continued net outflows. They seem to have slowed down a little bit, as before we saw about 480 million in daily outflows, then we saw about 530, and now we are only at 325. So we may see a shift in the outflows of the ETFs. Now, it's important to not overreact to a few days of data. So institutional investors often reposition portfolios based on macro conditions, quarter end reporting, risk management, and other factors as well. So thing is, ETF flows remain one of the most important indicators in the market because they provide insights into institutional sentiment. Now, of course, if inflows return, many traders will interpret that as a sign of renewed confidence. Now, if outflows continue, it could place additional pressure on Bitcoin and the broader crypto market. So for now, of course, demand remains one of the key metrics everyone is currently watching. Now, the third major development isn't actually happening in crypto itself, it's happening with the broader economy. Now, recent US economic data came in stronger than many analysts actually expected, and as a result, markets have reduced expectations for near-term interest rate cuts for the Federal Reserve. Now, why does this matter? Now, because crypto has increasingly become tied to global liquidity conditions, when interest rates are falling, investors tend to take more risk. And when rates stay elevated, investors often become more selective and defensive. And that's why we've seen weakness not only in crypto, but also in the other risk-sensitive assets. So for traders focused solely on crypto, it's easy to overlook macroeconomic factors as well. But right now, macro is arguably one of the most important forces influencing market behavior right now. So the Federal Reserve doesn't directly control Bitcoin, but changes in liquidity, borrowing costs, and investor risk appetite absolutely affect capital flows into the crypto ecosystem. Now, this is actually why many analysts believe the next major move for crypto may depend as much on macro conditions as it does on the crypto-specific developments themselves. Now, let's talk about one of the more interesting developments happening beneath the surface. Now, despite the recent decline in crypto prices, stablecoin adoption continues to grow. Now, this is very important because stablecoins often act as proxy for liquidity within the ecosystem. Now, when investors move from Bitcoin to stablecoins rather than fully exiting crypto, that capital remains available to re-enter the market later. Now, in other words, money isn't necessarily leaving the ecosystem, it's often moving just into a more of defensive position. So we've also seen continued growth in the stablecoin infrastructure, payment systems, and institutional adoption. Many analysts right now view stablecoins as one of the strongest real-world use cases for blockchain technology. While price action grabs headlines, stablecoin growth may actually be one of the most significant long-term trends happening in the industry today. So this is a reason why many investors remain constructive despite short-term volatility. Now, of course, one of the fastest changing variables in crypto is, of course, sentiment. So just a few weeks ago, conversations were focused on new highs and continued momentum. Today, discussions revolve around support levels, downside risk, and whether the correction has actually finished. Now, this kind of shift happens regularly in crypto markets. Now, fear and greed tend to move in cycles, and historically, some of the best opportunities emerge when sentiment becomes extremely negative, while some of the highest risk appear when sentiment becomes excessively optimistic. Right now, we are seeing a market that is reassessing expectations, but that doesn't automatically mean a bear market is actually beginning. It means that participants are actually demanding stronger evidence before committing additional capital. Now, before we wrap up for today, if you guys are currently looking for a platform to use, then look no further than Evedex. Now, Evedex is a decentralized trading platform that's currently gaining attention from their competition prize pools and trader rewards. Now, traders have the chance to win prizes such as iPhones, AirPods, and Apple Watches, and other rewards through their various events and campaigns. Now, what makes Evedex stand out is that it combines decentralized trading with a competitive environment where you can climb leaderboards and compete for prizes. They've also added funded trading on the exchange as well. So if you're interested in that, then make sure you definitely check that link down in the description below. And now, what should we actually focus on over these coming days? So first is Bitcoin's ability to hold the key support levels. Secondly, the ETF daily flow data. And then thirdly, the Federal Reserve expectations and the broader macroeconomic developments. Now, fourth, we have the stablecoin growth and liquidity trends. And then finally, any major regulatory announcements related to market structure or stablecoin legislation. So now, to summarize everything, the last 24 hours have been defined by Bitcoin weakness, ETF outflows, and more cautious risk environment. So however, beneath the surface, stablecoin adoption continues to grow. And now the institutional infrastructure continues to develop and the long-term foundations of the industry remain intact. So the market is currently trying to determine whether this is just a simple correction with a broader uptrend or the beginning of a longer consolidation phase. So the next week or two could provide some important clues. Now, thank you everyone for watching. If you found this update useful, make sure to stay tuned because the coming days could be extremely important in the direction of the crypto market. Now hit that like button, that'll be greatly appreciated, and I'll see you all in the next one.